With the S&P 500 officially entering a bull market, have I missed out on all those beautiful gains by trying to time the market with my free trade portfolio? So in this video, I'm going to show you my portfolio, how my holdings have fared over the past month, and if my strategy is working or whether or not I actually regret it. So starting off with my general investment account, currently I have a balance of £11,088.50. So as you can see, over the past month, I am up by £577, and I'm going to show you what these holdings are. And currently I do not have any S&P 500 holdings, and I'm going to kind of talk about that in a bit. So I haven't actually deposited any money into my free trade account, both the general investment account and also the ISA, for a few months now, but compared to the last month, I am up around £2,000 overall. If I go into the Insight tab, you can see that my portfolio performance over the past month has been 6.44%, and now that's compared to the FTSE All World ETF, and currently I am beating that by around 6%. If I look at the previous year's performance against something like the FTSE All World ETF, you can see that my strategy has beaten the market currently by 14.86%. Now, like I always say, just because I've beaten the market temporarily does not mean that I'm going to keep beating the market, and that is because of several decisions I have to personally make and make compromises between short-term and the long-term, and that's what I'm going to be talking about. So if I go into my portfolio now, we can see that I still have 0.01 shares in Intel, and that's down by 45%. So of course, Intel over the past month has been going through different stages where they dipped on the 25th of May and now they are recovering, and that is all to do with the fact that Intel has been investing more into their processors. They are going to be launching different SKUs of their processors, and also they're going to be focusing more on AI apparently. So that means that Intel's stock price has been going up a little bit, although compared to its maximum, Intel is so far behind competitors such as AMD, Apple, and even Nvidia, who have developed their own CPUs in addition to their existing GPUs. We can see from analyst ratings that it is not that favorable. Intel has 17% favorable, 61% saying nothing, and 22% unfavorable. And at the highest, Intel can be projected to be at $45, which is still well below its peak in 2021. Next, I have CSN, and they have given me a few dividends. So as you can see, quite a few dividends in May, 3 payments, 15 pence, 12 pence, and 16 pence, which is great because the current value is £3.82, which is pretty much nothing, but their dividend stands very high at 16.93%. But don't be fooled, don't invest into a company just because its dividends are high. That is never a great idea, and often it can be a dividend trap. I've also noticed that Freetrade have added a new button here called Create Recurring Order. I'm not going to do this for this fund, but you can set up a recurring order. Standard and Plus plan customers can enjoy easy ongoing automatic investments into selected stocks straight from their Freetrade cash balance. You can choose what you want to invest in, and you can set your investment amount and frequency. I've seen other investment companies do this recently, so we might be talking about that when we get to them. Next, I have 1.3 shares in Gap, and that's down by 30%. And over the past month, you can see that it has been rallying with a 15% increase. Gap also pays a dividend, and currently a high dividend yield of 6%. But again, not too many shares in that, and that is down by £4.20. Xinguang Real Estate is down by 88%, which is a very big amount, but I've only invested around £110 in this, so it's down by £92. And in dollars, that is down by $132. So it's not too insignificant, but I've already come to terms with that. And as you can see, from its maximum, it was trading at $48 in 2019 before the pandemic. So next, Kyndryl, always going to be plus 0%. I have 1.7 shares in that. I have Satona Al Kautha Global Focused Fund, and that is down by 7%, and that is a loss of £4.98. Again, nothing to worry about because it isn't a big holding. So next, I have Clover Health, and this is a very massive loss. Currently, I am down 92%, so that's £826. And like I always show in these updates, it's not very fun to be down that much, and most likely this company is going to become bankrupt. Not my first company that has become bankrupt since 2021, but again, it's going to be a loss of £900, which isn't very fun. But over the past month, it has pretty much flatlined because it dipped a lot at the end of May and then did go through a rise and then a fall. So it's basically very unsure about where it's going to be in the future. If we look at analyst ratings, only 17% favorable, and they're predicting it could go up to $3. And of course, I bought it a lot higher than $3. I think I bought it for around $12, $14.60, so that's even worse. I have 19 shares in the Vanguard ESG Global Distribution Fund, and that is down by 2.63%, so that's only a £1.97 loss. As you can see, they do pay dividends, and I was last paid in March, 21 pence. Currently, their dividend stands at 1.18%, which is not that high and nothing to kind of celebrate over, but the fund is doing okay nonetheless. Next, I have Aston Martin, so 41 shares in this, and this is down by another massive 86%, so that's a loss of £725. No dividend yield at the moment, and probably won't be, but analysts are kind of torn between between this 27% favorable and 27% unfavorable, saying that it could reach £3.10. But again, even if it reaches £3.10, I'm going to still be in a very high deficit, and I shouldn't have invested in Aston Martin at a price of £20 per share. Next is Crowdstrike, and I have exactly one share of this, and that is down by big 25% for a tech company, and that is down by £40 in my portfolio. As you can see, I did get this for free because I deposited over £10,000 in my ISA in 2021. But anyway, I'm still going to keep this because I don't want to sell it at a loss, and I'm sure that one day maybe it will go back up. Analysts are 86% favorable anyway, none of them are unfavorable, and they say that it could go up to 235, which will be a lot higher than I actually received it for free, so that will be nice and I might sell it then. Next I have AGM Holdings, and that is also a very big loss for me, so that's an 83% loss, so that's a £748 loss. All these losses really do add up, and I regret very much investing in these companies in 2021, but like I've always said, since then I've learnt a bit more about investing, and I don't invest in companies that I have no idea how they work. Anyway, AGM Holdings has no dividend yield, and there are no analyst ratings from Freetrade on this particular stock. Next, I have Cognite Software, and again, Cognite Software is not doing too great at all, so that's minus 78%. That's a £705 loss, and that's almost a $1,000 loss. And as you can see, no dividend yield, and analysts aren't really that favorable for it, I guess, and it says it can go up to $6, and $6 is not looking good for me. It is still a massive loss for me. So again, don't invest in the companies that you have no idea over. And honestly, during bull runs, I don't know why people invest so heavily. I've made a video looking at the psychology of that, so if you want to check that out, you can do that. Next, I have 20 shares in Fastly, and that is down by 70%, so that's a £629 loss. And as you can see, over the past month, Fastly has gone up by around 30%, which is really good, so that's very nice, and that has increased my portfolio slightly. It doesn't pay a dividend yield, and analysts are kind of not too happy about it. It predicts a maximum upper band of 26.50. Of course, analyst ratings are just predictions, and most of them are always wrong, so don't take that how it is. Take it with a large grain of salt, or even a bucket of salt. But I bought it at $61, so yeah, there's a long way for it to go for it to be profitable for me again. But again, it was trading over 130-ish, yep, during the pandemic, and it's gone down a huge amount. Next, we have Alibaba, and I have 6 shares in that, and that's down by minus 62% in dollars, so that's an $854 loss. It doesn't pay a dividend, and analysts are very favorable for it in the future, so that is a bit of good news. Over the past month, it has declined quite a bit, and then is starting to pick up again, maybe because of tensions between the US and China. Things are being a bit patchy. However, with tech companies beginning to actually recover, Alibaba might be one of those that kind of lags behind but follows that suit. Again, most investors don't know what they're investing in. They put money into different sectors thinking that tech sector is going to go up a lot maybe, and that's probably why we're seeing an increase like this. Next, I have 345,000 shares in Alba Mineral. Imagine if that went to £1, I would be very happy, but not too happy because I have to pay tax because this is not in my ISA. But anyway, that is down by 52%, so that's quite a big loss of £490. There is no dividend yield, and there is also no analyst rating. Stupidly, it probably was a very stupid move to actually invest in this, but I'm going to just keep it just because you never know what will happen. Honestly, I have no idea, and if it ever does go back up to what it used to be, that could make me quite a bit of money. Next, I have Metro Bank, and I have 581 shares of that, and that is down by 24%, so that's a big loss since 3 months ago, where it was actually really high, and I should have sold at that point, or was it 6 months ago? So it was around February, it was very high. I was in profit, I should have sold, and then the Silicon Valley Bank stuff happened. It hasn't recovered since, but analysts are also not actually favorable for this and think it might go up to £6. £6 would be very nice, because that would be a huge increase, because I bought this around maybe 134. The reason why there isn't actually a history of this is because Metro Bank has recently changed their name and structure, so it kind of acts as a new company, so you can't actually see the history of how much I bought it for, but off the top of my head it was £1.34. So next, I have 41 shares in Corsair, and Corsair has not been doing too great over the past month. As you can see, it's gone up and down, and that is a loss of minus 42% in dollars, so that's a $600 loss. Not doing great at all, no dividend yield, and analysts are slightly favorable that it could go up to $21. So I bought it for much higher than that, and yeah, that was a £1,000 investment, and maybe perhaps I should not have done that. So next, I have Shoals, and that's down by 28%, 8%, and in dollars that's 34%, so that's a $420 loss. As you can see, no dividend yield, and analysts are favorable of this company, and they predict at the upper bound it could go up to $42. That will be profitable for me, so yeah, we'll see where that goes. Next we have Baidu, and that over the past month actually has been doing really good. So it's taken an increase of around 11%, which is not too bad at all. And as you can see, there is no dividend yield, but analysts are pretty favorable, and currently no price targets, but I'm happy to keep Baidu for a bit. As you can see, it used to be valued extremely high. I don't think it will ever go back to that price anytime soon anyway, but I do want to make profit on this and probably potentially sell that off. So that covers all my individual stocks, and my strategy has been to try to buy a lot of the GSPX, the GSPX being very volatile. So if I quickly show the graph of the GSPX, you can see over the past month it has increased 4%, and it was hovering around the £7 mark, and then it's kind of rushed into 7.34. I personally didn't buy it again when it dipped, which I usually do. I just think that this rally is unpredictable, and potentially, yeah, we could be in the beginning of a massive bull run, and it could go all the way back up to the top and more. And in that case, maybe there will be regret, but I think I've made a lot of profit already, like guaranteed profits during this period, that I'm not too worried if it does shoot up. I do think there's potentials in other ETFs that you can look that have longer term potential. For example, one of these ETFs is the FTSE 250. I do think personally that there is a lot of growth, especially since the peak. Not saying that just because there was a peak there will be a peak again, but currently the FTSE 250 is trading very low, and my strategy going forward is actually to keep buying the FTSE 250. It has been incredibly volatile over the past month. These are just smoothened out, but there's actually more volatility here, as you can see, up and down, and then massive dip, and then again a huge increase of 3% in a few days. So that is why I have bought a ton of FTSE 250 shares. As you can see from here, I have bought 220 shares in my general investment account at 29.72. In hindsight, that was quite a lot, but I'm okay with that. So the FTSE 250 does pay dividend yield, and the ex-dividend date is on the 15th of June. So I'm going to be holding it until the ex-dividend date, because the dividend is actually quite juicy at 36 pence per share, and I bought lots of it. I will show you in my Freetrade account, but also my trading 212 accounts. And I think that the price of the FTSE 250 is going to actually fall with respect to the dividends, but that's okay. I'm going to hold it, and I'm expecting around £1,000 in dividends with the amount of shares that I have, so it's going to be quite a nice dividend. And maybe after the ex-dividend date the price will fall more, but I'm okay with that. I think long term the FTSE 250 will be showing quite a nice bit of growth, especially because it's very volatile at the moment, especially with the UK economy being very, doubtful, and recession fears coming back and forth. I think I made an okay decision with the FTSE 250, and for the first time in my account I have pretty much no cash, so only £26 in cash, and that's not enough to buy a whole share of the FTSE 250. So in a very rare occasion you are seeing me with no cash. And now let's check out the ISA. So this is my ISA. As you can see, the current balance is £51,982, and this is 2 years of deposits, so it's very easy to calculate the profit. So that's 11,982. Now this is a very good profit, and I'm very happy with that, and that is a reason why I'm not really regretful of my decisions of the whole GSPX stuff, the S&P 500. I feel like I've already made the gains up till this date. If I really wanted to not miss out on the bull run, I can just buy back in, because all the profits that I made already compensate for the loss that I've potentially made by not keeping the GSPX. But like I said, I'm very happy with my ISA. 11,000 for 2 years, especially during the worst market environments in a long time. I'm extremely happy with that. Like I said, since 2021 I've learned my lesson, and now I only really invest into ETFs or great companies. Like any investor, I want to maximize my returns, and my strategy is not going to be the same as everyone else's strategy. Everyone has a unique strategy. Even if you think you're just dollar cost averaging, you will have your own strategy. It's just the way that it works, so don't tell me otherwise. But of course, the surefire way of making wealth over 30-40 years is to just keep investing and not look at your portfolio. But how fun would that be for me? It wouldn't be fun at all. So let's go through my holdings and see my strategy in play. So in my ISA, like I said, I have learned from my lessons, and I don't invest in a lot of individual companies. This was bought a long time ago, 2021, so yeah, it's not a lot. I have 2,403 shares in Alba Mineral. That is down by 47%. Next, Mars Energy, and that is down by 87%. Again, not fun, but hey ho. I have invested it in 2021. Since then, I'm not going to invest in stupid companies like this, and that's down by 51%. Next, Amazon. And Amazon, I invested this much later on just because I did think that Amazon was going to go up, and I just wanted to put a tiny amount just to see if I was right. I think I put in about £15 or so, and that is up by 41%. Just as a proof of concept, I'll just keep it here. It's not really a big deal if I sell it or not. Next is Rolls-Royce, and I have 21 shares in that, and again, proof of concept, that is up by 118%, so £17.10 gain, and yeah, not much to talk about there. Aston Martin, this was more of the price fell down so much that I bought them the same amount I had in my GIA, in my ISA, just to make fun of myself, and as you can see, that is up by 84%, and that is a £61 gain. Next, I have Disney, and this is not doing great. This is down by 30%. I have 3 shares in that, and that is down by 96%. Once this company, once it reaches profit, I will actually just sell it. It's getting boring. And as you can see, I have a whole lot of shares in the FTSE 250. I have 1,734 shares, and even since buying it, it is up by 0.18%, so that's a £94 gain. I can either choose to take this gain, I guess, and invest it somewhere else, or just wait until the ex-dividend date and take a dividend of around £1,000 if my math is correct, because I have 1,700 shares here, 200 and something shares here, and probably another 1,000 in my Trading 212 account. I'm going to recalculate and decide if I actually want to take the profit, which is guaranteed, or the dividend, which once the dividend is paid, the stock price could actually go really down. So if I take profit now and then buy it when it goes down, I'll make twice the amount. So it is a decision that I have to make, but it's a fun one anyway. So like I said, I'm very happy with the performance of my ISA. And if I go into insights and portfolio performance, over the past month, I have beaten the market by 4%. As you can see, the market has dipped recently, but mine has stayed steady because I have been keeping a lot in cash and then, trying to time the market, which is not a great idea. But again, I have just invested in ETFs, and I'm willing to take the risk of doing this strategy, and already has paid off, and already I'm really happy with it. But like I said, we're now in bull run territory, and if we try to time the market during a bull run, we can be burnt because the price might just shoot up. So yeah, I'm going to hold on to the FTSE 250 for now. I'm very happy that I have the FTSE 250, and I'm not regretting the decision of not having a lot of the S&P 500, which I do think if it goes into bull run, it's going to go into a 10% bull run, and like that for me, in just the ISA alone, that could be £5,000 extra, but I'm okay with that. So I just wanted to show you the money weighted rate of return compared to the FTSE All World ETF. As you can see, I've just absolutely destroyed it. I am up 44% money weighted, and time weighted rate of return, I am up 35% compared to the FTSE All World ETF, which is up by 5%. And as you can see, the FTSE just has stayed still, whilst mine hasn't. I do want to reiterate that there is no point of timing the market. I am doing it because I am willing to take the risks, and I think it's a bunch of fun, and I think the videos are also fun. Don't do it. You might need the money more than me. And don't forget to check out my other videos, and I will see you in the next video.